Hello Rana, welcome in our session today. In this session I want us to learn how to use QuickBooks, and before we start, please subscribe to this channel so that we can get updates of other videos that I'm going to share with you. The channel is My Graphics Office Solutions, so please make sure you have subscribed so that you can get more updates of other videos that I'm going to share with you. Also share with a friend and like the video so that we can learn together with our friends. So QuickBooks, to start, you look for the application, open it. After opening, we are going to get a chance to create a company file. So it is through a company file that we are able to use QuickBooks, so that every activity that we are going to do in QuickBooks, every transaction we are going to do in QuickBooks, it is going to be recorded in a file. So this is the window that comes on display when you open QuickBooks. So you start by creating a new company file. There are two directions here. Either you can go through the interview or you can skip the interview. If you go through an interview, all the basic settings for a company file are going to be carried out before you can actually create the file. But if you skip the interview, all settings are going to come after already the file has been created. So we can do that. Skip interview. Provide a company file, I mean a file name or a company name. So the company name is what the file is going to be saved using. So I can call it my company. If it is the same name which is a registered name, you can use it, otherwise you can just leave it like that. Any other addressing information, if you have any addressing information for your company, you can fill in, otherwise you can just leave it at that. At this particular point, choose which type of business you are going to be carrying out. Is it a sole, or is it any of these? If it is not in either, your type of business is not in either of these categories there, just choose other. And when do you start your annual trading period, and then which industry are you in? The reason why we are being asked here a type of industry is that if you choose a specific type of industry, QuickBooks will create for you accounts related to that industry. If you can look here, but since we don't want QuickBooks to create for us any accounts, so we are going to say we are not in either of those industries, so that no accounts will be created for us. We are going to create the accounts ourselves. So after you finish, now you choose where to keep your company file, or where to save your company file. For the case of exams, and also for cases where you may require to carry your file from one computer to another, you may need to create a folder, so that the folder is the one that is going to hold the file. Actually, a company file is made with associate files that support the working of that file, and if you are to carry that file to other computers, then it needs that be carried together with other files that comes with it. So this is the folder where my file has been put. These are the associate files that comes with that file. So if you are to carry the file to any other location or any other computer to work with that file from that other computer, then you will need to carry the 3 files. It will not work on its own. So it is very recommendable, or it is very necessary that when you are carrying the file, please do carry that in a folder. So make sure when you are creating company file, you create in a folder that you can carry with you, either using a flash, or you are going to burn that folder in a CD, and it can open in another computer elsewhere. So when you open QuickBooks, or when you create QuickBooks company file, this is the screen that will come on display. Yes, this is the screen that is on display. And from here now you can start working with QuickBooks. The company file is now ready for use, and I want us to follow some direction using some notes that I have for you here. So we are going to work with QuickBook lists. You can see them listed here: items, charts of accounts, customer and suppliers. I want us to discuss these 3 types of lists in QuickBooks. Charts of accounts are all the accounts QuickBooks works with. Every transaction in QuickBooks is recorded in an account. If you are buying, there is an account to record what you are buying, and for example, if you are buying, there is going to be stock account that is going to receive the stock that you have received, you have bought. There is going to be a bank account that is going to record what amount has been used during the purchases, and that kind of thing. Items, this is a list that give items or commodities that you are transacting. If you are working with a shop, you are going to have sugar in your list of items. You are going to have fat. You are going to have whatever other commodity that you deal with in a shop. You are going to list it in the items list. Note, we are only providing a list of items, not actual items. Actual items are going to come after you buy them. For now, we are going to need a list of what we are going to be dealing with, not actual items being bought at this particular point. Then customer is a list of customers that you are going to work with. Supplier is a list of suppliers that you are going to buy from, and that kind of thing. So I want us to see charts of accounts. Where can we find it? Back to QuickBooks. Here you can find charts of accounts here. If you go to the list, you are going to find charts of accounts there also. So you can see here, so far, other than the default accounts that have been made by QuickBooks, we have no accounts here. So if I need to make a new account, you can see where I'm going. I go to accounts and then new account. These are the accounts that I can be able to work with. We categorize accounts in QuickBooks into 2. We have them as balance sheet or income and expense. So the balance sheet accounts are the ones that are on the lower part. Income and expense are on the upper part here. More balance sheet accounts, or more accounts, now all of them together. The income and expense, you can see, are here, and more accounts are here. More balance sheet accounts are there also. So if I am making an account that is equity, you can see description of what equity helps you to do. If you are working with loan, you can see what description of what accounts is associated with that category, a description of that. Now, balance sheet accounts, you can see them here according to my list. We have bank, account receivable, account payable. All these are balance sheet accounts. These are accounts that post the transaction to the to help in generation of the balance sheet account, balance sheet statement. So you think of balance sheet account as the money or things that you own and the debts that you owe. They include assets, bank accounts, building, all these, and this represents the net worth of your business, or the accounts that represent the net worth of your business, and they help in generation of the balance sheet statement or report that summarizes the financial position of the business. Now, expense accounts are accounts that reflect the expenses a business incur as well as income. Income are accounts that help or reflect the incomes a business has made, and the report you are going to get them there. So that these are about the income, about the accounts. We have so many types of accounts from the two categories, that is income and expense and the balance sheet accounts. If I may list them, asset accounts, you can see them. All these are asset accounts. They reflect what assets a business has, be it bank, account receivable, other current asset. All these are asset accounts. And then we have liability, account payable, credit cards. All these are liability accounts. Equity are accounts that help reflect the investment, the owner's investment to a business, including capital, the profit a business has made, retained earnings. These are the profits that were supposed to be taken by the owner, or they have been retained by the owner. The owner has decided to reinvest the profits. Income, these are accounts that reflect what income has been produced by the business. And all these other accounts, expense, reflect what expenses the business has incurred. And to add an account, you go down there where I've shown you. To add an account under QuickBooks, under choose accounts, you go to accounts, new, and then choose the type of account that you want to make. And it is a procedure. After you have chosen what type of account you want to make, you give that account a name. And in case there is any opening balance means if you are making the company file and it is after a transaction period has ended, and now you are making a company file for the next trading period. It means last year capital account, for example, the business closed with a capital of some amount. So at the beginning of this trading period, when I'm making this company file, capital account should have an opening balance, or a balance being carried forward from the previous transaction period of a given amount. So that is what you are putting here as the opening balance. If there is no opening balance for any account, then you are going to leave it like that and just create that account without any opening balance. That is the way to create an account. Items, again you go to a list, then items. Apart from the default items QuickBooks has made for you, you should be able to go to items and then create a new. We have different types of items. They may not be listed here because I can see other than non-stock, we should have stock items. So I want very fast to activate that. I show you from edit and then preference, and then you go to items and stock, you go to company preference, stock, activate that, so that now when you go to items list, you go to new item, you are now going to see that we have service stock part that was not there. So it is sometimes called inventory or stock part, non-stock part or non-inventory part, and these other items. So from the notes that we have here, this is the procedure. Like you have seen, you go to list, then items list, and then you choose from the drop down menu what item that you want to make. And we have different types of items, like you can see them listed here. Service items, these are items that reflect non-tangible service that you offer to customers. You are selling a service, it means you are selling non-tangible commodity to the customers. Inventory parts, these are items that you deal with. You buy and sell items, physical commodity that you buy and sell. So it is the opposite of the service. The service you are selling non-physical commodity, or a commodity that is not physical. Like if you are teaching, so teaching is a service. If you are offering doctoral services, then the doctor offer a service to a client. If you are in matatus, if you are, let's say you are in transport, maybe you charge a customer to carry their goods, or you are carrying the customer themselves from one place to another, so you are selling a transport service. Physical items, like you are buying a computer, so from where you are buying, then the computer is an inventory part because it was bought and now it is being sold by the owner of the business. Non-inventory parts, these are items that you purchase to help in producing. For example, if you are in a hotel business, then you buy sugar to help in producing tea that is now then going to be sold. You buy flour to help produce chapatis that are now to be sold. But the sugar and the flour are inventory parts. They are meant to reproduce other items. Inventory assembly, these are bought to assemble a complete item that is to be sold. For example, you may buy vehicle single parts and then reassemble a whole commodity that is now to be resold again. Other changes, for example, if you are in a business and people or customers buy and you charge them fee to transport their goods, then these are other changes whatever you charge to a customer other than what they have bought is other charges. And we have all these others I've just mentioned, the ones that we are likely to use very often. We have subtotal, group, and discount, which is meant to be deduced from the total amount that you have bought. Tax is what you charge a customer to be given to the local authorities. So if the local authority demand that you charge customer and transfer the same to them, then that is that charge is under tax category of item. So that is the various items that you are likely to come across, and we will not discuss class for now, and when maybe in another video when we need to discuss that, I'm going to discuss it with you. Customer, again we mentioned it, these are the persons that you sell to, so you need to make them their list, or you can make their list while you don't have to make their list at the start of the settings of the company file. So what we are doing here, the creating of accounts, the creating of items, the creating of customers and suppliers, that is basic settings for the company file to be complete. But the settings you can do as you are doing the transactions. You can create items as you are doing the transactions. You can create accounts as you need them during transactions. The same with the supplier and customer. Supplier and customer you are going to get from the customer center. You can create a new customer there. If you have debts with the customer, maybe you had dealt with the customer last year and there is outstanding debts with them, you open, you create, you reflect the opening balance for that customer and the customer name, of course, any addressing information to the customer, and you say okay. The same with the supplier. If you had a supplier that you are working with or you intend to be working with, you create that supplier. If the supplier prior trading period you had debts with them, you indicate opening balance with them like that. So that is the various list that we are going to work with: customer, supplier, items, charts for accounts. The reports, you read the reports in QuickBooks from here. So we have different reports. You can go to trial balance. The trial balance show you the status of the account, charts of accounts. The outstanding balance of the charts of accounts will reflect under trial balance. Trial balance reflect all the balance of the QuickBooks accounts. And you can go to company and finances. There you are going to get profit and loss statement. You are going to get the balance sheet statement is there also. So any report that you may need to read, you are going to read it under the report menu. And other than from the report menu here, you can also go to the report center, and there from there you can read the reports from there. If you want to read the reports under account and taxes, you can read from there. If you need to read reports from which was the other one that I have just shown you, company and finances, to read the profit and loss and the income and expense accounts, the income and expense reports, I mean. So you can read it from there. There are some concepts that we need to understand here. Bookkeeping, Bookkeeping is the process of recording transactions, and accounting is information system that include the accounting is the recording of the transactions that are incurred in a business. So transactions that you carry out, they are recorded as accounting of whatever activity that you have done in your business. And the chronological recording of these accountings is what we regard as bookkeeping. Now here, in a pictorial form, you can be able to see the meaning of what we were talking about there. Bookkeeping is recording of all transactions. But other activity including interpreting whatever you have recorded. So recording alone is what is regarded as bookkeeping. Interpreting, analyzing what you have recorded, reporting and summarizing everything, all this now makes out what accounting is. In bookkeeping, during recording, we need to understand what entry means. Entry is recording of a transaction. This can be single entry or double entry. In our case, we are going to deal with double entry recordings. Double entry is where a transaction will affect two accounts. For example, if you are buying a computer, at least two different accounts are affected. There is an account that is going to give amounts during purchasing. There is an account to receive the amounts during purchasing. At least two accounts should be affected. It is not always two. There can be more than two being affected, but at least two accounts in double entry concept should be affected, which is not the case with single entry. Single entry, only one account is affected during a transaction recording. Let me see. There is something I want us to look at here. I want you to read what a ledger is. After you have read the discussion of what is a ledger, you are going to realize the accounts, the QuickBooks accounts that you have been talking about are what we regard as ledger accounts. So the QuickBooks accounts are the ledger accounts. We can group the accounts as either sales, purchase, and general ledgers. So all the general ledgers, you can see they are amounting to what we are making the balance sheet accounts, and then sales and purchase are making the income and expense accounts. If you may look carefully there, you are going to note that these notes are going to be shared. I would like you to follow through the example of recording a transaction. See A T account is what a ledger account looks like, a T, and it should record debit and credit. So here we are being told that in an account we either are going to debit or credit a transaction. If money is moving out of the account, then you are crediting that amount. If money is getting into an account, then you are debiting that amount. Not always the case, because there are cases where money, if it gets into an account, you are going to carry out a credit on that. But on a general point of view, just note that in an account transaction that gets money into the account, you are going to debit that transaction, otherwise you are going to credit it. This is what you can see here. For the case of assets, increasing amount of assets are going to be debited, otherwise they are going to be credited. This is the opposite of expenses. Increasing, yeah, it is the same, yeah, actually. So expenses, also increasing of expenses are going to be debited, and increases of decrease of expenses are going to be decreased, going to be credited. I mean, owners' drawings and capital, their increase and their decrease, you can see the way they are being recorded. But for the case of liabilities, increasing liabilities are going to be credited, while decreasing are going to be debited. That is now the opposite of what we are doing with assets. The same case with the revenues, it is the opposite with the assets. Increasing revenues are going to be credited and debited if otherwise. Okay, that is the scenario where I was telling you there might be some transactions that the transactions increase of the amounts of transaction involving that account are going to be credited. So yeah, you have seen the example of a scenario that is going to work that way. So as a summary, during recording of a transaction, note you are recording a transaction is recorded in a ledger account, and this ledger account is in the form of a T, whereby one side is being regarded as the debit side, the other one is being regarded as the credit side, and increases of amounts are debited and decreases of amounts are credited for the general case. But like we have seen in our summary here, the accounts whose increase amounts are being debited and whose decrease of amounts are being credited are assets, expenses, which are the one, and drawings. But capital, revenues, and liabilities are the opposite. Increasing amounts of these accounts are credited, while decreasing amounts of these accounts are debited. So that is the summary. And from here we are going to look at some exercises, and this is in our next session. So the next session we are going to look at the exercises. So thank you for the time that we have been together in this session. If you have not subscribed, please do subscribe so that you are going to be notified when we get the next video on the channel. Other updates of every other video that I'm going to post for you, you are going to be notified. So please do make sure that you have subscribed and share with a friend too, so that we can get to learn together. and like the video if you have rubbed them. So thank you, and see you in the next session.